It's very competitive. I mean, I do this full time. When I wake up in the morning and when I go to bed, I'm thinking about trying to source deals and capital all day long. And, you have a different job role as well, as do you, right? So I'm competing with the firms in Miami that have 50 of me that are cold calling and emailing and knocking on doors. And that's really tough to compete with. And you guys are competing with people who are doing this full time. Yeah. And other people competing with you who actually live here, who are doing it part-time. So there's just so much level of competition. Agreed. And it's really a full-time job.
And you have amateur competition too, which is frustrating in the sense that some people will show up and pay a ridiculous number for something, right? Mm-hmm. And they might do that deal, or they'll put it in the seller's head that they can possibly get that deal done at that price, and the math just doesn't even remotely work. And so you get that craziness too. At least some of those, the bigger firms now, they have the ability to buy at higher prices because their cost of capital is a little different too. Mm-hmm. So you got those guys that are willing to pay up because their cost of capital is different. You got amateurs that are paying up because they're just doing poor deals. And then you have foreign money that's investing here because they just need to get their money out of a specific area and they just need to park it, so they'll pay up. And then you got 1031 money that's trying to dodge debt or taxes, and so they'll pay up. So you got this complex situation where if you're just a realistic investor that's just trying to cash flow, it just doesn't work sometimes.
I think there are two things that I think about when you talk about that is one, patience, and two, not going after highly marketed opportunities. I think you have to be patient in this business. Real estate is not a get-rich-quick game. Online, it looks to be. A lot of people online.
And the sales guys, they're selling the courses. Oh yeah, I'm invested in 2,000 units and 3,000 units, and I'm living in a mansion. It's number one. Maybe the guy's 60 years old and been doing it for 30 years. And actually, the course I went to, the Rod Khleif course, he's a great guy. He's super experienced, but he even talks about in the course how he got rich and then went broke. And 07 through 10, somewhere in that time frame, he was invested in syndicating thousands of units, and he had to give the keys back on so many of them, and he gave the keys back on his home, his mansion over there on the west coast of Florida, and then had to rebuild himself a second time. This time he said he's not doing it the same way. He's being much more conservative. He sees that we're entering, stormy seas, and so people learn. Even the most experienced investors do that.
Yeah, I think patience is the most important thing, right? Yeah. You listen to Warren Buffett, and he says, I don't care what the stock does today or tomorrow, I'm here for 50, 60 years. So if you tell yourself, I'm going to be here and I'm going to be buying properties for the next 50 years, if you miss one or two here and there, it's not the end of the world. You don't have to bid on every single deal. And it doesn't happen immediately. Even if you buy a deal, you might make a little bit of money off the buy or whatever, but you have to hold. And so you have to be patient. And then two, for us, we don't like to look at highly marketed deals because of how, one, not only competitive they are, but two, you a lot of times get pushed into a corner, especially when the market's good. Today, I think it's a little bit more of a buyer's market than a seller's market, but we've been coming out of a very aggressive seller's market. So they say, all right, we're blasting this to 10,000 people. The group in California, the group in Texas, the group in New York, in Rhode Island, and wherever are looking at it because they're saying, I don't like what's going on in my market, Florida. I mean, people who look at Florida from outside of Florida think it's like, is there just 1 million people moving is it the hype is real. Mm-hmm. And don't get me wrong, we're here and we're seeing that. Is it as crazy as everyone makes it? Probably not, right? Not. But people want to invest here. And so what I'm saying is that during those marketed processes, you're competing with, as we said, 1031 buyers, people from out of state who want to get down here, want to plant a flag. And not only that, but it's the terms that are difficult. So the pricing may not be, it'll probably get bid up because there are a lot of people involved, but it's the terms. So they may say, well, if you want this deal, you need to put hard money day one. Well, I haven't even seen the property. Well, you got to put hard money. Do you want this or not? And so now you get into a situation where you put, your own capital or your firm's capital at risk. Now, if you're down here and you know the buildings really, really well, and and maybe you can do that. You've been in there before. But I don't like being in situations where it's a beauty pageant and I have to make myself look better than the next guy. Even if I'm paying a similar price, I'd rather deal directly with one broker and an owner, or just directly with the owner and say, listen, here's what I think it's worth. Here's what I'll pay. This is why. It'll be smooth. I need a little bit of time to do due diligence. And then after that, we'll close. Here are my terms. I'll look you in the eye. I'll shake your hand. I'll be there. I'll pick up the call at any point. And for a lot of the owners that we've done business with, they really appreciate that. They've owned these assets for a long time. They know the tenants personally, and they don't want to have 15 groups come through, knock on doors, go in people's units. And especially when COVID was happening, people were afraid of COVID. So they said, hey, no one can come. So, you got to get comfortable not going into a unit, or I only want one group. So that's the way we like to do business, is in one-off situations where you may be getting a little bit of a discount, but it's not, for the most part. There's so many transactions happening down here. People know what their properties are worth, but you at least get to work with someone one-on-one and look them in the eye and have a relationship where it's not totally transactional.
Too. It's not hectic where, like you said,
High
you
stress.
probably have to go in day one, no inspection period, hard money. Money's hard. That's scary. That's going kamikaze style. Sometimes it works out and you get a great deal, but other times if you do that, you get a disaster on your hands.
And like I said, that comes back to the patience thing. I don't need to buy every deal. I don't need to do every deal. If I have high conviction in something, I want to do it, great. But it's the people who are like, we have to do this deal right now because our fund, we only have an investment horizon until 2 months from now. We got to get this money out, or we're not going to raise the next fund. Yeah. And so I don't want to have to compete against those people. So that's, I think, patience, and then trying to find unique opportunities that are not the widely marketed ones are where you're probably going to have the most success.
Obviously, you can go to brokers and make relationships with brokers, which I'm sure you do. But as you know, the downside of that is that then you're obviously going to be competing against multiple investors. You just mentioned that. You can still sometimes find great deals, and you can be the highest bidder and win those deals, but that's going to be a lot more difficult. How do you find those deals one-on-one without a broker? Are you knocking on doors? Are you making calls? Are you mailing?
Yeah, well, first and foremost, I want to say that the brokers are by far and away the best way to get to deals.
Agreed.
No question.
Agreed.
I love brokers. I love working with them. I in no way try to avoid them. They're fantastic, and they are really the lifeline to this business.
I agree.
And a lot of times, even these deals that are quote unquote not marketed are still through a broker. So, I would say 95% of the time you're working through a broker, even if it's not a widely marketed listing agreement that goes out to 10,000 people.
So a lot of these are off-market broker deals that are brokered. They bring them to you. I've purchased a couple of those. I know Larry's purchased some off-market deals. Two of my best deals were off-market through some of these guys, and I think we share some of the same contacts.
Right, right. And so, an owner, brokers are paid and make money by knowing owners, right? So brokers know everybody. Who owns this? Who knows here? So you get to know the brokers, and you say, hey, this is my buy box. You come up with I want 25 units or greater. I want built after 1975. I want concrete block construction. I want maximum 2 stories. I want no elevators. You don't make it too specific. I usually just say, 25 units and greater, built after 1975. And that's it. I want to make it as broad as possible because I want to see as many deals as possible. I'd rather tell them that I don't want to do it than then not send it to me where I could have done it. So I would say brokers are extremely important, and I love working with them. Now, there have been times where I have reached out to owners who own properties near me that are friends of friends, and sometimes that can work. And what I'll do is I'll either cold call them or I'll leave a note in their door. Those are really primarily the two ways. But I don't know if that return on effort is there. I think you could arguably just stick with the brokers. And because a lot of times these sellers, as I said, they know the brokers, and they say, listen, I want to sell, but I don't want to do a full marketing process. Bring me 1 or 2 buyers. And if you can be those 1 or 2 buyers that the broker goes to, says, Larry and JJ, we're going to go with you. Now you're in a position where it's just you and one other person. You're not competing against 100 people. So I would say foster and grow your broker relationships, get to know them personally. It's not just about the deals. And to the extent you have the time or have certain assets that you really like and you think are in great locations that you'd love to own, call them. Everyone you can look up. Most of these properties are owned in LLCs. The LLCs are with the Department of State. You go on the Department of State website, you see who the manager is, you look up we can find someone's number or email pretty much anybody. So, so I would say if there's certain assets you really want in your markets, then I would do that. But I would say 90 to 90% of your transactions will most likely come through brokers.
So you guys may know this, Jaron. I have cold callers on staff for my residential real estate brokerage, right? And so that's part of our business model. It works decently. And for a period of time, I had more cold callers, and they were calling only multifamily for myself, right? And I did. I don't know, this is probably 2018, 2019, I did some off-market deals direct from those cold call leads, right? But over time, I pulled back on that. It's, to your point, the return on effort, even when I'm paying someone to do it, it just wasn't efficient enough. And the reality is, and the deals that I did pick up were like small deals. So again, like that return wasn't really there. It's best to... What I do is I have a CRM for any of my clients on the residential brokerage side, and my commercial real estate contacts are also in that CRM. And so they're treated just like prospective clients in my CRM, right? So like I got people's birthdays, I got people, whatever, just all that. It's there, and I'm just reaching out to them when they pop up in my CRM to call them, and I just have a conversation if I haven't been talking to them already for deal-specific things. So
I think also that the cold calling and reaching out is great, you made a point about smaller properties, right? A single-family home. There's probably, if you look at the percentage, chances that you're going to actually sell or buy that property, if it's single-family home, is probably the highest. Condo, also probably the highest. Duplex, and as you go once you get to 150 units, you're most likely not calling the owner and having him sell it to you one-off, right?
It's going to be hard to find the owner, too.
Right,
once
exactly.
you get to those types of deals. And then a lot of times they're partners or they're syndications or who is the owner?
Correct, correct.
Even the property managers barely know who the owner is sometimes. So, on bigger deals.